I'm Joey Blanco with RWB Realty Group, and in today's video, we're going to talk about the real estate market in Oklahoma City and what it's done from January until mid-April, and then we're going to talk about what we think it's going to do in the summer and in the fall going forward. So let's just get right into it. Now, I'm going to put some slides up probably here, and so I don't want to kill you guys by death by PowerPoint, but it's important that you see some of these statistics, and I'm going to be going over them also. So if you see me looking off camera, that's what I'm doing. So let's ask ourselves, will inventory improve in the spring housing market? Well, there's a couple of indicators that are telling us that things are likely to improve. Now, according to Realtor.com, the inventory of homes actively for sale increased in 45 out of the 50 of the largest metros compared to last year. And in 4 large metros, inventory was above pre-pandemic levels. So, what does this mean for us? Well, what it means is it's a good thing. The market is going in the right direction. We're having more homes come on the market. And when more homes come on the market, typically home prices come down. And so, in this slide right here, we're going to see the change in inventory year over year. And if you want to look at the rest of the country, you can, but we're going to focus on Oklahoma. And year over year, we are up 25%. We have 25.5% more inventory this year than we did last year. And that's slightly above the national average of 23.5%. Now, Realtor.com says for the first 3 months of this year, the inventory of homes actively for sale was at its highest level since 2020. However, while inventory this March is much improved compared to what it was the previous 3 years, it is still down 37.9, almost 38% compared with typical 2017 to 2019 levels. And let's just skip right ahead, and you could see in this graph right here where we are in March. March of 2024 is the dark green, and homes actively for sale, we are above where we were in 21, 22, and 23. So that is good news, especially for Oklahoma City, because we've had such low inventory, it seems like for so long. And now finally, we're getting some we're getting some homes on the market. Okay, now I'm going to throw a curveball at you, and I'm going to add into this graphic the homes actively for sale uh, in 2017, 18, 19, and 20. And so what you're going to see is while in 2024, we are above where we were in 21, 22, and 23, we are still below the pre-pandemic levels that we were at in 2017 through 2020. So uh, while inventory is better, it's not where it once was. So why are we seeing the increase of homes for sale? Well, according to Doug Duncan, who is the senior VP and chief economist at Fannie Mae, he says consumer attitudes towards home selling conditions increased markedly in February, with current homeowners, in particular, expressing greater optimism that's a good times to sell, a development that may foreshadow upcoming increase in existing home listings. So he's saying that the sellers are seeing that now is a good time to sell, and that's putting more inventory on the market in Oklahoma City. Let's transition to mortgage rates. Mortgage rates are another thing that can affect the housing market, not only in Oklahoma City, but all over the nation. So the Federal Reserve met, and on March the 20th, they decided that they would keep the rates unchanged for now. And actually, here is their latest decision. The committee decided to maintain the target range uh, from 5.25 to 5.5%. Uh, the Fed holds rates steady, but they maintain that three cuts could be coming this year. Forbes says current expectations are that the Fed will start to cut rates at some point between June and September. Now, as you could guess, what is that going to do for the market in Oklahoma City? Well, if the Fed cuts rates this summer, you could expect home prices to go up. And why is that? That's because more buyers are going to come out of the woodwork currently that are renting and waiting for these rates to come down. And when the rates start dropping, buyers are going to flood the market and home prices will more than likely climb. Here you're going to find the 2024 mortgage rate projections. And these are just projections of what Fannie Mae, the MBA, the NAR all think that the Fed is going to do. And you could see the average of all three. They're saying that by the fourth quarter, the end of the year, 2024, rates should be around 6.2%. On this chart, you could see the correlation between interest rates and buyer demand. And you could see here if rates come below 6.5%, we're going to be in the green. Green is good. If they drop below 6%, then buyer demand is going to be very strong. And that's when we'll see, and we're already seeing it now on home prices below 250. We're seeing multiple offer situations in some cases, but if rates drop below 6% this summer or in the fall, you're going to see more of that, and home prices will more than likely rise. So now let's jump into home affordability. So, according to the deputy chief economist of First American, when you zoom out, affordability is still very, very low from a historical perspective. On this chart here, you could see what the housing affordability index is going all the way back from 1990. And so on this graph, low is bad and high is good. So you could see that in the orange, the years, this was the 2008 crash. And so right after the 2008 crash, you could see homes were very affordable in 2009 through 2015. That's because there was so much inventory out there due to people foreclosing on their homes. So when you look back all the way to 1990, homes are less affordable today than any point in history for the past 30 years. Okay, so when you talk about affordability, you have to talk about the home price forecast. So home affordability is directly correlated to how fast the price of homes is going up. And thankfully, thankfully, I say thankfully for the buyers, maybe not much, so much for the sellers, although the sellers have been doing very well. But we're not seeing so far uh, all the way. This is as of 4/2 2024. Um, the average forecast of homes this year is going to be an increase in 3.2%. And uh, home prices climbing by 3.2% annually is a nice, steady rise. And so, what we've seen in the past is increases of 10, 15% or more year over year. And that directly affects whether or not people can afford homes or not. The last thing I want to touch on is the 2024 rental report. Now, there is an argument to be made of whether or not it's cheaper to rent a house now or to buy a house. And a lot of home buyers struggle with that decision. Some people say, oh, it's way cheaper to own a home. But then, there's just as many people that say it's cheaper to rent. Now, uh, this data is from the 50 largest metros, and the overall, just overall between studio, one bedroom, two bedroom, um, places to rent, the average is about 1,700, while the average mortgage payment right now is sitting just under 2,000. So if you went solely by this graph, you would say, well, Joe, it's much cheaper to rent than it is to buy. And technically you would be correct. However, there's always a catch. So you would be correct if you were not taking the price appreciation that's projected of the home you would purchase this year. So here's an example. If you purchased a $400,000 home, based on the projections of, of home prices going up on average 3%, this is what your home would be worth in 2029. And we're looking at 483, 385 for an increase of $83,000 of equity that you would have. So now if you're renting, your rents are going to go up from now until 2029, but you are not going to have that equity. So I would argue that it is better to buy and let that home appreciate so you can grab that equity than to continue to rent. So the next argument you're going to make, I'm sure, is, but Joey, what about closing costs? It costs so much to buy a home. Well, the cost of buying a home on average, closing costs and so forth, is about $16,000. Now, this doesn't include putting 20% down. This is just the average on a $400,000 house, what you could be expect to bring to closing. And so it cost you 16.5. Well, let's take that away from what that home would appreciate, and that still leaves you with $66,000 in your pocket. So those of you who follow NerdWallet, they say from high prices to low inventory, potential home buyers know it's gnarly out there, and I can attest to that. But if you're ready for home ownership, the long-term benefits of buying often outweighs the pain of toughing out the search, even these days. So in conclusion, yes, there is more inventory in the market, even here in Oklahoma City, but home prices are going up. And when interest rates come down, like they're forecasted to in the summer and the fall, uh, that's going to flood the market with buyers, and the sellers. Um, it's going to squarely be a seller's market. Even though we're going to have more inventory, we're going to have even more buyers. What does that mean? For the sellers, if you're thinking about selling your home, I would go ahead and put it on the market between now and the fall. Um, there's really no perfect time to put it on the market, uh, except for what's perfect for you and your family. If you put it on the market between now and fall, you'll be fine. For the buyer, I would lean towards leaving that rental um, sooner than later. You're going to want to get in on this market earlier. The earlier, the better. If you wait until the end of summer and the fall when rates come down, then you're going to be in bidding wars on any home that you're looking at. And so probably better to buy now and then refinance a year from now into that lower rate. So if you're looking to buy or sell a home, give us a call at RWB Realty Group. We'd be happy to help you. Or if you have any questions about anything ever about real estate, just put the question in the comment below. I check those and I'll answer. Or you can reach out via email, text, give me a call, what have you. I'm always around to answer your questions. I love talking real estate and I'd be happy to field them. I hope you found this video informative. If you would, if you could like and subscribe to my channel, that would help me grow the channel. I believe I'm at 126 subscribers, trying to get to, let's say, 200 by the end of the year. And by liking and subscribing, you can help me with that. All right. Have a great evening and thank you.